Hello, and welcome to 10-Minute Mastery. This session will be about closing entries. This will include an introduction and examples. By the end of this 10-Minute Mastery, you will be able to journalize closing entries. Let's start here. What are closing entries? Closing entries are defined as the transferring of the balances of the revenue, expenses, and drawing accounts to the owner's capital account. There are 4 closing entries. Closing entries are step 9 in a 10-step accounting cycle. Closing entries are prepared after the financial statements and before the post-closing trial balance. The order to prepare the closing entries are: Step 1, close the revenue account to the income summary account. Step 2, close the expense accounts to the income summary account. Step 3, close income summary account to capital. And step 4, close the drawing account to the capital account. What does this all mean? Let's jump in and practice journalizing closing entries. Closing entry number 1 example. After the accounts have been adjusted on December 31st, that's the end of the fiscal year, the following balances were taken from the ledger of Arctic Company. In this first closing entry, we will close the revenue account to income summary. This is what it looks like journalized. We enter the date December 31. Fees earned is the debit in the amount of $844,000. The credit is to the income summary account in the amount of $844,000. Closing entry number 2 example. Closing entry number 2, we will close all of the expense accounts to the income summary account. This is what the journal entry looks like. Enter the date December 31. The debit is to income summary in the amount of $393,575. Where did I get this amount? Well, that's the amount of all of the expenses added together. All of those expenses will be a credit in this journal entry. So we're going to credit the wages expense in the amount of $330,000, rent expense in the amount of $45,000, supplies expense in the amount of $12,375, and then miscellaneous expense. The credit will be $6,200. Closing entry number 3 example. In closing entry number 3, we are going to close income summary to the capital account. This is what it looks like. First, enter the date December 31. The debit is to income summary in the amount of $450,425. The capital account is credited in the same amount of $450,425. Now you might be asking, where did this come from? Well, I have your answer. This amount of $450,452 comes from the ledger for the income summary account. So this is what it looks like when we transfer those closing entries to the income summary ledger. This is what happened in closing entry 1. Remember, we had that credit in the amount of $844,000. Closing entry number 2, which was the entry before this one, we had a debit in the amount of $393,575. Remember, that's the amount of all those expenses added together. So after we debited the income summary account in closing entry number 2, we extended the balance, and then we had a credit balance of $450,452. So we need to close the income summary to the capital account here. In order to close the income summary account, we need to get rid of the balance here, right? So we have that prior credit balance. Now we're going to debit in that same amount of $450,425. When we do that here with closing entry number 3, you can see that this will close out this income summary account. See those lines over there in the balance column? That means we have closed this account. Now let's take care of closing entry number 4. In closing entry number 4, we will close the drawing account to capital. This is what closing entry number 4 looks like when we journalize it. We have the date there of December 31. The debit is to TP Capital in the amount of $20,000. The credit is TP Drawing in the same amount of $20,000. Thank you for viewing. Feel free to leave a comment below, and don't forget to subscribe and hit that like button.